Hey, what is happening, guys? Wanted to give a quick update on the most recent roadmap. Just kind of reiterating some of the points that I have already made, and just make a couple more comments on the near term, like what to expect. The overarching, like the crux of that video, was not to focus on the shorter term, potential downside that we were posting a lean on, and I said that outspokenly. Like the real opportunity that you want to focus on is buying the dip. We bought the dip, and I wish I bought more. Like, you should always be wishing that in your trades, but we did not get the path for that pullback below 65.50. The other path, which we are now in, is to the highest degree of confidence that I can have for my work, the lens I view the market through. We are good to go. Like, we should expect upside. We may get downside, but it is going to be very reflexive in the near term. In the next few weeks, when we get downside, if we do, it's going to be like a rubber band snapping back into place. You might get one red session, and the following morning by 10:30 a.m. you would want to be a buyer. We're going to not see, for the next 2 to 3 weeks, we have support on the flow side, but for the next 7 days, maybe 7 to 10 days, we do not want to trade short-term, shorter duration. For the next 7 to 10 days, not sessions. The next 7 to 10 days, it's going to be like a release valve on that steam for the very, like you've seen spot gamma post 95th percentile for call skew. It's a very blanket assumption on a complex product. Understand that that's not the right assumption, that it's some sort of top. It's not a top. It's likely a pause and a release valve on that steam, but not every duration is expensive. You have to know with time series, there is skew to time as well. Without getting too complicated, just be very weary of don't trust me. Don't trust anybody where you get information like it's a top or it's this, that, and the other, but just be mindful and be cognizant that it's always an uphill battle trading options, like buying calls and puts on a shorter duration, especially out of the money. It's always an uphill battle. That uphill battle is now it's a 90-degree wall. It's usually a steep hill. It's a 90-degree wall right now. So when you want to trade something on a shorter duration, if you want an intraday trade intraday, go out in time. Go buy 30 plus days, 90 plus days, and then trade it. It might cost more notional, but it is much less risk. You're not fighting. It's an uphill battle, but it's a lot more level than the 90-degree wall that is what implied volatility is on these shorter durations. That's where call skew is in the 95th percentile, but it's not even that high. Like, it's a very blanket assumption for something that is a very complex product. Like in 1999, when we were having parabolic moves, was call skew elevated and staying elevated? Absolutely. There's outliers in every blanket statement that you can't just apply. It's not one size fit all. Like, when RSI is oversold and markets are crashing, is that an indicator that you should buy? No, markets crash from oversold levels. There's more sellers than buyers. Just be aware that at the end of this cycle, the 15-year bull run, whatever it is, the end of this cycle, I've always said this, and it is my expectation still, that it is going to be fireworks. It's not going to end like, really mild and then just be the top. It's going to end with FOMO. It's going to end with a very large move to the upside. And if you're not long for that, you'll be a part of the FOMO. That's how it happens. You, unbeknownst to you, are likely part of the repeated psychology of investors. If you're not long, you will get long at the wrong time. When it is the top, you shouldn't get long. When you throw in the towel, like, don't be betting against this market. I specifically said those were rentals. We did trade those, the trades I had, and I was posting publicly on like things like coin. I'm only in like coin and gold right now. I don't have a ton of positions on at any given time. I have like 4 max for core. I might be trading more if there's, if it's worth trading. It is not worth trading here. Save the mental capital. Focus on like the first hour, the last hour and a half of the day. That's the only times that really matter. If nothing's happened by lunchtime, so if there's not some move that happens by like noon, there's a very high likelihood the dealer's got this wrapped up with a nice little bow on top, and there's nothing that's going to happen unless there's news. So just bear that in mind. We are in it's an outlier occurrence of how low realized volatility is compared to implied. So stop trying to trade for the expectation that we will realize volatility. Stop trying to trade what isn't moving. Find the pockets of the market that are moving. If you want to trade intraday, focus on time. If you want to trade the larger move, focus on going out in time. Focus on what is expensive and what is cheap. If you don't have a way of viewing that or a lens to view that, that's why people join our service. That's what we sell. We give you color and context on a phenomenon that you otherwise would know nothing about, but impacts almost everybody's strategy if you're playing the larger games, if you're not playing like penny stocks. We still always do offer, and we do know who is a new member and who is not, the new member promotion. At the end of the day, it's a trade. You're betting on the value add derived from our service being greater than the value or the monetary value you pay. It is a great trade. You come to find out very fast why the full ticket price is it's still cheap in my opinion, but there's a relative nature to the value add. In any case, shoot me a DM if you want to book a call with me or someone from the team. We will shoot you a calendar link or set up a time to have a call. Overall, just to summarize everything, the next 7 to 10 days, you really want to be hands off, waiting for places and spots to get positioned on things you may want to buy. If we do get any weakness, the next 2 to 3 weeks, we're going to have supportive flows overall. So we should not expect any major pullbacks, really. We should expect, if we have any pullbacks, to look to buy those. Like if you were coming into the market today, like, oh shit, it's going red, that's not the move. I'm not trading for the upside. I would like to see it go lower, but trade for like it coming back to unchanged overall compared to, out of the money puts at the open. Stop trading intraday with options to the best of your ability if you can for your strategy. It's very expensive right now on the shorter durations for how low volatility, like how we're not realize we have some sort of move, like last week we have some intraday move, and then it's not like it incrementally comes back in, it flatlines. We have zero volatility after that. Be aware of the paradigms that are controlling markets right now. That is the current paradigm. It will change, but for the time being, we have no realized volatility. We should not expect that to change until it does. Focus on time, and maybe switch to underlying. There's going to be a spotlight if you don't understand options or aren't proficient in the basics of pricing an option or how they're priced. There is going to be a giant spotlight on every one of your inefficiencies or inabilities for the product you trade. It's not as easy as up arrow, down arrow on Robinhood. Anyway, I didn't want to make this a long video. We are expecting much higher prices. I've always said that, always expected it. Markets are going to go higher, even if there's like a 1,000-point correction. Would love to see that. Markets will go higher. We are not at the end of the distribution. For the next 2 quarters minimum, we are going higher. There is still plenty of liquidity. There's never been any QT. They're expanding the balance sheet in other areas. That's another thing. I don't really care about that as much for my work specifically, but just be aware that there is nothing like materially changing in December. We've been expanding through non-monetary facilities and policies that we've enacted. Like 2023, we have this banking act that we have a ton of stuff that they're not telling you that expands the balance sheet, like right now, like that just counteracts exactly what the QT is supposed to do. But don't lose sight of the larger picture. The larger opportunity is still to the upside. It's not complicated. The things that move the most will continue to move the most, but it's always very helpful to know the color and context on what's happening underneath the hood. All right, guys, good luck. Talk soon.